Good morning, students. Today we are going to see JLP accounting treatment. As I have already told you, JLP is treated as an expense, as an asset, and as a reserve. If you have not watched my earlier video, Basic Concept on JLP, please do visit that video before looking into this so that you will have a clear understanding. Whenever there is an admission or retirement, the firm will surrender its policy because a new partner is coming inside or a partner is leaving the firm. Then they will be getting the surrender value from the insurance company, or in case of death of a partner, the sum assured will be received by the firm from the insurance company. So let us see the first case in this video. When it is treated as an expense, you have to watch continuously, because if I put as an expense, as an asset and a reserve into one video, it becomes a very long video. So I have bifurcated it into as an expense, then as an asset and a reserve maybe. Okay. So now let us get into the video. JLP is taken for a value of 1,50,000 for a partnership firm for 20 years. There is 3 partners ABC and their profit sharing ratio is equal. That is 1:1:1. And the premium is payable 15,000 year after year. Okay, so the closing of the year is 31st December. Let us take it as 31st December. Every year is the closing of the year, accounting year, 31st December. Okay, so now in case of treating it as an expense, what would be the journal entry? So first we have to make the payment of insurance premium. In case in your question the date of payment of premium is given, you can write the date, and here I am not giving any date. You can take it as July, August or any month. Okay, so before closing of the year, so I am taking it as JLP, insurance premium account, debit, insurance premium account, debit 15,000, because there is a cash outflow of 15,000. I have to credit the bank account. Okay, to bank account. Always don't forget to write the narration. I am not writing the narration. You have to write the narration, that is JLP insurance premium paid. Very simple language you can use to write what you are doing. You have to write it so that the person who is looking into that can have a clear understanding what is done and why this journal is made. Okay. Now this being a nominal account, we have to transfer it to P&L account at the end of the accounting year. So 31st December, I am taking it as in the year of 2018. So I am making a profit and loss account is debited, P&L account is debited with the 15,000, and the total insurance premium is credited. So to JLP insurance premium account. It's very simple. Listen very carefully so that you are able to apply it in your sum. Insurance premium account 15,000. Clear? So now what happened? The total amount of premium is charged to P&L account. Before this, suppose let us take it in the year of 2017. Let me take that 31st December 2017, the firm earned a profit of 1,20,000. It is assumed. It is assumed that 1,20,000 is earned by the firm. In that case, what will happen? In your P&L account, the income will appear as 1,20,000. Let me assume as 1,20,000. This total 1,20,000 will be transferred to P&L appropriation account. All of you know that it is an intermediary account, and in partnership account all payments relating to partners are made through P&L appropriation account. My lines are not so good, don't go into that. By P&L account, this 1,20,000 is transferred, and this will be distributed among the partners. I am not taking other considerations except this. So this amount is, in case there is interest on capital, etc., remuneration, that will be given. But here, for this case, we are assuming that nothing is available. The total 1,20,000 will be distributed among the partners. As the partners are equal, their PSR is equal, we are distributing to them in the ratio of 1:1:1. So they will be getting 40,000, 40,000 and 40,000. So the total comes to 1,20,000. Okay. But now in this year, how our P&L account will appear? In 2019, we have taken an insurance policy and joint life policy, and we have charged the insurance premium as an expense, the total premium into your P&L account. So now how the P&L account will appear? I am taking the income same as income or profit, whatever you name you give, 1,20,000, and here the insurance premium, joint life policy insurance premium is charged to P&L account, insurance premium. So now this 15,000 is going into this. So the net profit available for P&L appropriation is 1,05,000 now. Clear? 1,20,000 and 1,20,000. For better understanding, I am taking the same income. Okay. Now the P&L appropriation account I am making here. P&L appropriation account. This 1,05,000 will get transferred to P&L appropriation account by P&L account. 1,05,000. So again, assuming no other payment is to be made to partners, we are distributing the share of profit to partners. Capital account to A. I am writing everything in short, to A, B, C. You have to write share of profit to partners, capital account, A's capital account, B's capital account, and C's capital account. Now this is distributed in equal ratio, that is 35,000, 35,000 and 35,000 in the year of 2019. This is at the end of 2019. Sorry, 2018. The policy is taken in the year of 2018. So 2017 nothing was there. 2018 we have distributed this 35,000 to each of the partners. From this what you come to know that the insurance premium, the burden of insurance premium 15,000 is borne by all the partners, not a single partner. So this is borne by all the partners. That's why their profit has come down, reduced by 5,000 here in this case. In each case, so the total comes to 15,000 is borne by all the partners. When the burden is borne by all the partners, any amount received from the insurance company will be distributed among the partners because the firm is paying the premium in case of joint life policy. Hope it's very clear now, because that's why I have shown you the previous year P&L appropriation and the current year after making the payment of insurance premium 15,000. Okay, so year after year they will be going on making payment of insurance premium. Cash flow will be remaining the same, and the distribution is reduced. The profit has come down by 5,000. Okay, so here the conclusion is the joint life policy insurance premium is borne by all the partners. Premium is borne by all the partners, and any amount receivable from the insurance company is distributed among old partners in old profit sharing ratio by partners. Okay. So in this case, ma'am, how to understand whether this JLP is treated as an expense or an asset or a reserve? See here, you may be given a balance sheet. Balance sheet of your company may be given in the question. In that you will have an liability side and your asset side. Liability will be having A, B, C capital account. You will be having the amount, or you may be having the creditors, bill payable, bank overdraft, etc. And on the asset side, you will be having, maybe having fixed asset and current asset and so on. The total comes suppose I am taking here for an example, this total is 2 lakh rupee and this total is also 2 lakh rupee. See here, in the balance sheet, there is nothing appearing in the name of JLP. Only in the adjustment, if you are given, suppose C retires, I am taking in this case C retires on 15th January 2020, and the surrender value is rupees 15,000. For example, okay, let me take the surrender value as 9,000. Okay, so the surrender value is given. Then what you have to do, it is only an adjustment. Generally you will be getting in comprehensive problems this, but if you are given a separate sum also, you can understand it that nothing will appear in your balance sheet in the name of JLP, and you are given the surrender value, means the total insurance premium is treated as an expense and charged to P&L account. Now this surrender value is received from the insurance company. So what is the journal entry you will be making? Bank account debit ₹9,000 you have received to JLP account. $9,000. So this 9,000 will be distributed among all the partners. Now you are understanding why it is distributed among all the partners. Though C is retiring or a particular person is on the death of a particular person, still it is distributed among all the partners. JLP account debit 9,000 to ABC, equal partners, so we are going to give them equal amount of 3,000, 3,000, 3,000. Clear? So the conclusion is nothing will appear in your balance sheet in the name of JLP, and if you are given the surrender value or C dies and the value of policy is 1,50,000. Then the insurance company will make the payment of 1,50,000. So you have to distribute this 1,50,000 among the partners. That is, bank account debit 1,50,000 to JLP account 1,50,000, and JLP account debit 1,50,000 to ABC 50,000, 50,000, 50,000 each. Okay. So when it is treated as an expense, nothing is distributed to them till the amount is received from the insurance company, and no JLP account will appear in your balance sheet. That's all for this video. We will continue when JLP is treated as an asset. What is the accounting treatment? Thank you for watching.